Hello traders, Cousin Vinny coming to you from theclosingprint.com on May 31st, 2020 with your weekend video newsletter where we'll cover the indices, all of which moved higher last week after pulling back on Friday, finishing the week above the 200-day moving average. The Hang Seng was basically flat, and we're starting to see bullish action in emerging markets that continues through the last few weeks. Most of the tech stocks were mixed for the most part, with Facebook being down over 4%. We'll talk about those names as well. Intel was a little bit higher, as well as Tesla, with a successful SpaceX launch this weekend. The bond stock ratio is bullish. HYG and junk are very bullish. The Dow Composite is trending. S&P 1500 is improving. And the XII ARC Institutional Index is trending and bullish. Tick and TickQ turned higher towards the middle of the day on Friday. And we have NYMO and NAMO neutral for the most part. And with NASI and NYSE, the summation indexes for both the Nasdaq and the NYSE, bullish and trending. Breadth thrusts are neutral. And the S&P Equal Weight Index is flagging, looking for a follow-through, with A50R showing 95% of stocks trading above their 50-day moving average to start the week. In addition, the New York Stock Exchange Advanced Decline shows breadth is improving and bullish. CPC has started to rise. It's at 0.92, typically reflecting a trending market, with VIX dropping to 27.51. That's bullish and will continue to fuel the market should VIX follow through on a path lower this week. US dollar has been fading. It's at the 200-day moving average, closed just below it on Friday. US dollar yen is rising, and British pound US dollar is bullish and rising as well above its 21-day moving average. Bonds have been in a sideways pattern for much of the last 8 to 9 weeks, with TLT fading, while gold and commodities have been looking a little bit more bullish. Copper is reflective of an improving economy as long as it continues to move higher. And we see West Texas crude up over 450% from its low 6 weeks ago. We also see the heat map improving markedly last week with more greens and lime greens, strength in transports, travel, leisure, media, home builders, oil and gas names, technology, and some telecom names. International markets is improving as well. South American countries, Europe improving, Russia looked better, while Southeast Asia countries have been weakening somewhat. We'll look at some IBD 50 names, most of them showing extraordinary strength last week, following through Wednesday, Thursday, and Friday, in most cases extending performance over the last few weeks that we've seen in many of these growth stocks. We'll also look at some MarketSmith Growth 250, some Blue Dot Scan candidates in cyan, and some stocks in the top volume percent gainers in green. Bukowski is showing 505 green with a CPI signal bullish since May the 15th. Last week at 100%, backing off to 93% this week, still bullish with one bearish pattern, 14 bullish patterns, and 136 patterns waiting for breakout. Bottom line, the markets are looking very bullish. We'd like to see breadth continue to improve, and gamma as well, as price action remains above the 200-day short-term support going into this week. Starting off with the spiders, we did retest the 200-day moving average on Friday. I was looking for that to give us an indication that maybe we continue to see higher prices, and a test of these pivots from the early March reversal and this gap overhead north of 325, 326. First target looks like 1618 I took from the low Thursday 3 weeks ago, where we gapped up on Monday, consolidated for a week, then gapped above the 200-day last week, consolidating and recharging for a potential move to the upside. Spot gamma shows you for the S&P 500 Top gamma strike is 30.50, zero gamma is 29.87. For the spiders, top gamma strike 310 and zero gamma at 302. So we'd like to see price action stay above these lower numbers, 302, as we start trading the month of June. Buyers did step up after the Trump announcement on Friday, close almost at the high of the day in the upper half of the daily range. In addition, RSI remains above 50, that's bullish, and MACD is above its signal line on rising volume. All of this is more bullish than bearish going into the first week of June. The Nasdaq 100 also had a very good week, filling the gap from the February drop with a handsome-looking long-legged doji pattern. For the week, RSI remains above 50. MACD is firmly above its signal line despite the mixed results from the big cap tech stocks that we follow, rendering a more bullish than bearish scenario as we approach all-time highs once again. We also saw IWM, the small cap Russell, continue its path higher last week. It did finish off the highs of the week, and I did notice over the last few weeks that there's more and more of you trading small cap stocks, so make sure you keep a chart of IWM open as well. If you're trading some of those $2, $3, $5, $10 stocks, you need to keep an eye on the Russell as well, which appears to be headed for a bullish move through the 50 RSI level. MACD has crossed, so we should see momentum continue to push many of those lower price stocks higher. You have the 50-day moving average overhead as potential resistance and last week's highs. Together with those charts previously mentioned, we also have the S&P 1500 Composite, a broader measure of market participation, S&P 500, S&P 400 mid caps, S&P 600 small caps, on a bullish trajectory, beginning to make a very solid turn to the upside, which would forecast a bullish follow-through over the weeks and months to come. Doesn't mean we'll see a straight shot to the moon, but all of the last 10 trading days, we've seen green elder sticks, Bollinger Bands are opening up. That's telling you to expect a fast move. The S&P 1500 could very likely start to head towards these pivot highs that we saw previously on the SPY chart presented the first week of March, where we got rejected at the descending moving averages. We're headed back in that direction, so that would be my first potential level of resistance, while the high-low percent cumulative basis looks very promising for the bulls going forward. Compounding the problems for the bears, because this is not my opinion, this is what the data is showing us, that more stocks are advancing, more stocks are making new highs, more stocks are showing bullish breadth. Therefore, it's very difficult to get very bearish at the present time until a lot of these factors change. We can see the same data in XII, the ARCA Institutional Index, 75 stocks institutions commonly hold in their core portfolios. And if you follow this methodology using standard deviation 1 and standard deviation 2, the outer bands, when price action stays inside of standard deviation 1 and 2, it is said to be trending and bullish. Consider a stop once price action closes inside of standard deviation 1, the darker area. Then reassess if the trend stays bullish. In this case, we are bullish and trending right at the previously mentioned first week of March reversal area. If we break through that zone on these 75 stocks, that would portend a breakout for the previous indices that we've discussed thus far. The one caveat that I do see is the number of stocks trading above their 50-day moving average. This particular chart is the S&P Equal Weight Index. No stock is more important than any other by weight. We're flagging. We had buyers step up at the low of the day on Friday, looking for this to break higher with the 618 Fibonacci level from the February peak down to the March 23 lows, with A50R showing 95% of stocks are above their 50-day moving average, while enabling the number of stocks trading above their 200-period moving average, in this case, shows that we still have potential for follow-through. Even if the stocks trading above their 50-day do dip a little bit, flag or pullback to the moving averages in a bullish scenario. This number of stocks gives us an indication that we could see more follow-through in the number of stocks moving above their 200-day moving average as we test some of those overhead resistance levels. So just keep that in mind and understand we're not looking for a straight shot back to all-time highs. We will see back and fill like we've seen over the last few weeks. In some cases, pullbacks that last a couple of weeks, some that last 2 or 3 days, and some that last a week where we move sideways. So any of those variables are still bullish going into the seasonally weaker summer months of the year. Something to consider, especially if you look at a large group of stocks like the New York Stock Exchange Composite of 2,900 stocks, to look forward to June and July, seasonally sometimes the stronger months of the year. So be careful going into the month of August and pay attention to seasonality. Our signal is green on VIX as well going into this week. This is a 60-minute time frame. As long as it stays green, VIX is telling us to look for higher highs and higher lows. While the daily continues to fade, the 50-day has made a nice peak and is turning rapidly lower. VIX is giving us an indication that we could see more normalized volatility levels as this continues to drop, along with a number of COVID cases and the negative news during the summer months of the year as economies begin to open and more positive news permeates the markets. As the number of stocks above their 50-day moving average and 200-day moving average indicate, breadth always remains a caveat. So at this point, the S&P 500 advanced decline percent in the upper panel, mid caps, small caps, and Nasdaq 100 in the lower panel illustrate we're above the zero line. We did pull back somewhat towards the end of the week. However, with positive news and stocks moving above their 200-day moving average, we could see more follow-through. It is the one caveat, though. We need to see breadth continue to improve. NIMO and NAMO, the Mcclellan Oscillator, give you similar indications. Most of the action you can see in the background, the light gray area is above the zero line, very little below, while the summation index continues to rise for both the NYSE, the New York Stock Exchange, and the Nasdaq, rendering a more bullish than bearish scenario going into this week. While the New York Stock Exchange new highs minus new lows continues to trend above the zero line, moving average has been climbing, and the New York Stock Exchange advanced decline continues to make higher highs and higher lows to start the week. The bond stock ratio is bullish as the S&P 500 on this weekly time frame moves above the 50 period. This is telling you to favor equities over bonds. While the 7-10-year bond has been moving sideways for 9 weeks, while the 20-year trades in the lower part of its 9-week range as well, below the moving averages, while junk bonds reflect a investor's appetite for risk. As this continues to move higher, this is a risk-on indicator. As you can see in that daily time frame, if we go out to the weekly time frame, you can see a series of higher highs and higher lows. We're looking for a move above the moving averages, RSIs transitioning above 50, and price action is full-on bullish, telling us to be more bullish for equities and more open to a risk-on positioning. As MACD is turning, volume is increasing. While bonds continue to be range-bound, we also see the U.S. dollar at the 200-period moving average fading a bit below this 9-week range. With Bollinger Bands beginning to open up, MACD is drifting below the zero line. We're looking for further downside in the dollar in the weeks to come. If the 200-day doesn't hold, it appears buyers stepped up right at the 200-day, so there's a possibility we could bounce back up into these Bollinger Bands as well. That said, commodities like copper continue their path higher highs and higher lows in this channel that we've been watching for the last few weeks. This is bullish for construction-related names as well as home builders in addition to home improvement retailers like Lowe's and Home Depot. We also see gold moving higher. RSI is above 50. We're in this tightening range or triangle pattern. Looks like we could get a breakout this week if follow through occurs. We'd be trading in an area of very little supply overhead. MACD is starting to turn. And if we zoom out, we can see a larger pattern on the monthly time frame. A big cup forming with the right side just about complete at these overhead levels, 1800, 1900. If we transition above this level, there is very little supply overhead, as you can see with volume by price on the left side. So what I'm anticipating is we run into 1920 thereabouts. If we break out this week, we see a handle over the next few weeks, next few months, and then eventually a follow through. If we don't get a handle on the US dollar situation, with the Fed continuing to just print money out of thin air, resulting in inflation and an appreciation in commodity-related assets like gold and silver. If we look at the sector heat map, we can see that through the current time frame, we have transitioned from chartreuse into a few oranges and then reds, reading from left to right. The present week, we're starting to improve again with the strongest sectors in darker green. So make sure you pause the video and check those out. Materials, media, retail, leisure, and entertainment. Those sectors improving. Financials improving. Oil and gas improving. Healthcare starting to look a little better. U.S. financial services industry group looking better, as well as the industrials, aerospace, transports, building and construction, among others. So the improvement is noteworthy and potential for more follow through as well. In addition to what we see in the international indices, where we have the South American countries, much of Europe doing much better, and the Southeast Asia countries showing the most weakness. In other words, leave your opinion at the door and let the data suggest where you should position this week going into the first week of June. Most of the sectors, price action is above the rising 21-day and 50-day moving averages, the blue and red line respectively. Technology looks good. Communications look good. Consumer discretionary. Healthcare is pushing out of a range. XLI Industrials had a very bullish week, only pulling back a little bit on Friday, potentially looking like a flag or a follow-through. Real estate looks good. Transports look good. Materials look good. Even staples and utilities look good. So I can have the opinion that the markets are going to go to hell in a handbasket, but the data has to say the same thing. In this case, we're more bullish than bearish going forward. Looking at international markets, we can see the same thing. Argentina, emerging markets look good. Canada, Australia, Ireland, among others. Just stop the video and consider the areas where you might want to invest your money, as many of these look very strong, like the Netherlands continues to trend higher on much higher volume. The same with Brazil, which had a very good week. Even though it did transition a little bit lower on Thursday, Friday saw a buyer step up. South Korea looking a little better, while the Nikkei in Japan continues to reflect bullish sentiment. Russia is trending, and the Vanguard International Index continues to improve. Here is the IBD 50 once again. We're looking for stocks that are trending. The 9 EMA above the 21-day, price above both in most cases, having retested or retesting that area going into this week. We want to see RSI above 50. We would like to see volume as well. In the case of Adobe, we see volume as price action pulls away from the 9 EMA, just testing it on Friday. There is potential for this to continue and follow through. Cup and handle patterns and similar ascending triangle looking patterns are continuation patterns where most will follow through. The same with AMD, moving back above the 9 and 21 day on Friday. Nice expansion day. Look for a retest of the top of the range. RSI is above 50. MACD needs to turn as a function of price. Volume increasing. Some of these REITs, a little flag or a pullback is fine. A breakout above these pivot levels is what we're looking for on above average volume. Do note the volume on Friday was a bit bearish, but price action managed to stay above the 9 and 21 day. Alexion, maybe a forecast of what some of the other pharmaceutical stocks will do this week. Following through gap and go last week, breaking above resistance on way above average volume. MACD above its signal line, and RSI above 50 and overbought now. Look for a little flag. Not interested in trading Alexion. I just want to point out that there are other pharmaceutical stocks that could follow suit this week. So be sure and check your favorites. American Tower, another REIT, most likely going to have profiting off of the 5G rollout. Flag at resistance, looking for a breakout. Volume shows institutions have been picking up shares, about 10 million, 12 million shares that traded last week. MACD above its signal line and RSI above 50. So look for a breakout. You might have a trade there going into the summer. Anthem Health from previous watch list. Note the sectors we talked about. XLV is improving. That looks good. Looks like a breakout above these levels. 52-week highs. RSI above 50. MACD above its signal line. And volume increasing, indicating institutions are active. Applied Materials looks like it's going to spring off of this level. Volume increasing. MACD above its signal line. RSI rising. Same idea with audio codes from previous watch lists following through. Higher highs and higher lows. Price action above a rising and bullish 9 and 21 day. 200 day turning up as well. RSI above 50. Staying close to 70, showing this is a very strong trend. Looking for a follow through. Autodesk, looking for a follow through breakout above this pivot high. Volume increasing, showing institutions are active. MACD above its signal line and rising. Box showing a little flag, volume increasing, looking for a breakout. Overbought, so it could pull back to the 90 EMA first. Just check it out this week. Chegg, a gap and go after earnings several weeks ago, pull back to the 21 day. We're watching for a push off of this level, consolidating gains in a sideways range above the 9 and 21 day, giving RSI a chance to get off the overbought levels. Could be a trade here. Watch for increasing volume. It tests the 21 day that holds and then a follow through day. So it'll be a multi-day process if you're thinking about trading this one, or if you're already in it. Look for that test and a follow through if you want to swing this one for more gains, considering selling premium against your position while you wait. Dexcom, nice bounce on Wednesday, follow through. Look for a push through the 21 day. RSI is indicating strength. Volume starting to increase. MACD will turn as a function of price. Look for a push above the 9 EMA this week. That would be an indication that we're going to see follow through in the first week of June. Dollar General, new on the IBD 50, breaking out, tested the 9 EMA and 21 day last week. Looking very strong. Just check out Lulu's chart 2 weeks ago off the Thursday reversal. That was a nice trade as well. A bit overextended now, but it does look very similar to what we're seeing on Dollar General. So look for follow through, maybe 200. The depth of this pattern, 10, 15 points on top of this level. So we could see 200, 205, 210 maybe in the weeks to come. Volume increasing, MACD above its signal line. This is an indication institutions really like what they saw last week, following through on above average volume. Dropbox trending above the 9 and 21 day. Buyers stepped up on Friday. RSI is flat, looking for a follow through breakout. Looks like a cup and handle continuation pattern. Etsy from the watch list last week, looking for a follow through and potentially for Etsy to test 88 and break out above that level this week. You can see this nice W continuation pattern as we broke above these levels. Continues to perform well, showing you institutions, by virtue of the volume, are pretty active. At a minimum, I'd see 88 this week. Looking for a trade on Monday, Tuesday, if you were day trading it with us last week. Facebook, watch this consolidation this week. Fortinet, probably one of the nicer setups. This is a very strong stock, looking like it's going to follow through. We got two bullish candles, a push on Monday Tuesday, this should be a follow-through trade. Volume increasing again, MACD's turning. I would say a retest of the highs is in the cards, with RSI already suggesting we're going to see higher prices. Godaddy on the watch list several weeks in a row, continues to build as it moved above the 9 and 21 day, then the 200 day, which is turning up now. Price action consolidating. A breakout of this range would forecast a continuation pattern. It's more of a V shape, but this is still considered a cup and handle pattern. Continuation, volume increasing, look for a breakout this week. I'm staying away from Chinese stocks in the short term until we get something figured out. I think there's just too much risk, with too many other candidates that we could potentially focus on, like Netflix coming down to the 21 day after a nice pullback, giving us an opportunity. All of the moving averages are still very bullish. RSI is rising, volume starting to increase again. If we see RVOL high very early in the morning, say around 10 o'clock, 10:30, and we start to see some big options trades, we'll let you know. That's what I'm anticipating this week, for a move back above the 21 day moving average, with risk reward very close to where price action closed on Friday, just below these wicks would be my stop. If we get a nice gap up on Monday, is most likely just going to continue higher. Again, watch for RVOL early in the morning around 10:15, 10:30, and big block options trades. NBIX tested the 21 day. This is what I'm anticipating that we might see out of Netflix. Follow through above the 9 EMA. RSI rising, volume starts to increase. Looking for a breakout, NBIX. Nvidia, another strong candidate, tested the 21 day on Wednesday. Buyers stepped up, dipped a little bit on Thursday, but followed through nicely with an expansion day on Friday. RSI rising, volume increasing. Look for Nvidia to break out this week. While many of the payment processors that we've focused on over the last couple of weeks, Square, PayPal, Visa, MasterCard, look like they're all going to follow through as well. Big bounce on Wednesday at the 21 day, bullish 9 and 21 day RSI showing muscle. Volume increasing, 20 million shares Thursday and Friday. MACD's turning as a function of price. Look for a breakout and a follow through with PayPal leading the way. PennyMac Financial Services, we talked about this one last week as well. Looking for a follow through. Look at the volume, MACD above its signal line, RSI above 50. Looks like this one could spring off of this 33 level and break out towards 36 in the short term. PetMed Express, Chewy, and many other names in this group. People are going to take care of their pets. Looking for a follow through this week. Bounced at the 21 day. Buyers stepped up looking for a follow through on what looks like a cup pattern building. Right side, MACD above its signal line, volume starting to increase, and RSI above 50. Look for a follow-through day, continuation day on Monday and Tuesday, and then a retest of the highs at 41 as your targets. Progress Software, I don't recall if it was on the IBD 50 last week. Regardless, looks very bullish. Software names, watch Microsoft and other names in the group as well. While these stocks like ResMed and the others in the healthcare sector looking strong. 3 days in a row, buyers stepped up on Wednesday, followed through, looking for a retest of the highs, RSI above 50, volume increasing, and MACD will turn as a function of price. ServiceNow, common theme, reversal on Wednesday at the 21 day, Thursday pretty strong, volume increasing, MACD turning, RSI above 50, look for a breakout this week. Sprouts Farmers Market, pretty strong stock over the last few weeks as this continues to build along the 9 and 21 day, very bullish. RSI is staying above 50. MACD will turn back up. Watch for volume to start increasing. Keep an eye on RVOL early in the morning. Mondays and Tuesdays to start the week could get a nice swing for 3 or 4 days in stocks like Sprouts Farmers Market. Teradyne looking for a push off the 9 EMA. A break above this big red candle this week would portend a move back up to 73, 74. RSI is above 50. Volume increasing, showing institutions are active. MACD above its signal line, indicating bulls are in control. Look for a follow through this week. TER, Teradyne. Torino Realty, these little pullbacks give you a better opportunity. If this does spring into action on Monday and Tuesday, breaks above this 53 level, look for a test of 56, and then these highs over here at 60, 61, 62 in the short term. RSI is above 50. Want to see volume turn more green and MACD stay above its signal line, ultimately with a test of this 52, 53 level on Monday and Tuesday and a breakout this week. Trade Desk had a nice bullish few weeks, then it consolidated for 3 weeks. Looking for this to spring into action this week and follow through. So keep an eye on Trade Desk. This one could be a good trade swing on a breakout of what looks like a big cup and handle pattern on above average volume. Looking for a breakout Monday and Tuesday. TradeWeb, this one's been on the watch list off and on. We talked about this one over the last few weeks. Every time it pulls back to the 9 and 20 day, it gets bought. No change here. Wednesday, reversal. Thursday, Friday, breakout on above average volume. MACD above its signal line and RSI rising. Vertex Pharmaceuticals, in addition to the previous IBD 50 stock that we mentioned, Alexion was the leader last week, gapping and running. Look for Vertex VRTX to do the same thing. RSI above 50, above average volume. MACD's turning as a function of price, looking like we're going to break out this week. Virtu Financial, very nice looking ascending triangle sort of looking pattern. Looking for continuation and a breakout above 25.26 this week, potentially. MACD turning and volume increasing. Workday, one of the strongest names in the group, looking for a follow through. Volume increasing, gap and go. Look for a breakout and a retest of these highs. RSI showing muscle. MACD above its signal line and rising. Zoom continues to work. Every time it pulls back, it's an opportunity. We're a little bit off of that level now. Looks like it's going to break out. Maybe wait for the next pullback. Otherwise, this one looks like a good day trade if we see a follow-through expansion day on Monday. Volume increased on Friday as it tested those recent highs. Zynex, this one had a very nice trend. Many of you traded this one over the last few weeks. This consolidation pattern of recent gains could see a follow-through in the weeks to come, so keep this one on your short list of go-to names. MACD's turning, volume starting to increase. Looking for a nice move from 20 to 23 if you're thinking about some day trade short-term swings going into this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. May the 31st, transitioning into the first week of June this week. I'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Make sure you check that out in your inbox. Also, look at some of these names in the Market Smith Growth 250, Blue Dot Scan as well, in Cyan and the top volume percent gainers. Make sure you check out some of the names in the relative strength category, which look very strong. I gave you the top of the list from my perspective, so these names have already been scanned for potential follow-through going into this first week of June trading. Okay, traders, I hope this helps. Take care. I will talk to you soon.